All right, and we're back. It's been a very long time, and the reports of my death have been highly exaggerated. And if you know what that quote's from, then good for you. Put it down in the comments below. Welcome back. If you don't know who I am, I'm Ben Collins, CFA charter holder and Chief Investment Officer at Options Autopilot, which is an automated options trading platform. You can get more info down below in the description if you want to try it out for $45 for a month. Feel free. I think it'll help you. So anyways, I just wanted to get back into it and say, a belated happy birthday to America. Just celebrated the 4th of July last weekend, of course, and getting back into it, celebrating with some gains in the market. So I just wanted to go over current portfolio, what I've been up to since it has been, almost 2 months probably since I updated. Just been doing a lot of stuff outside of the market as well, which that's the benefit of automation, right? I can just let it run. But also some long positions, some manual positions that have been finally working out. If you've been following along, you'll probably be familiar with them. But just want to give an update on where we're at and kind of what I'm seeing and what I'm expecting and what I'm going to do both with the manual trades and just automation in general. Just diving into it, obviously this is my TastyTrade account. Since I probably updated last, I can't remember if we were back to break even or a little bit above, but now we're at all-time highs in the account. We're definitely back to where we were from an automation standpoint. I think this is close to accurate. It's maybe slightly high for what the automations have produced. I need to go through and we need to audit this because we had to close down a couple things. But that's all from automations, and this is the dashboard on Options Autopilot. I've still got the same strategies running that I talked about before, which I'll go over a little bit. But finally, we can see some of the long positions have started to work. Namely, obviously, SOFI, Intel's starting to work. We'll go over that, and RIVN a little bit. But SOFI is the big one, and I will basically go over that in a little bit. But I also just wanted to start out and show, where we're at in terms of strategies. These are just a couple 111s. The automation ran today. It's set up to run on Tuesdays. So basically, put on a new position today. You can see the 0 days. I did one last week. So it's just basically doing those. We can see implied volatility rank is very low. Usually that does happen when markets are trending though. So in this instance, I don't know if you can call this a trend now, but, resistance is, below us maybe at this point. I guess the path of least resistance is to the upside is usually what they'll say at this point. Let's just take a peek at SPX and see where we are looking currently. So, remember all this tariff nonsense that blew up a lot of people and gave me a pretty big drawdown at the peak, which all self-inflicted, or I guess Trump-inflicted. And it's not a political statement. It's just, how it is in the market at times. So we've now kind of done a V-shaped recovery. This is where you kind of just need to be risk managed, of course, and just keep things running. Because a lot of people basically obviously got hurt, myself included. You saw that. I was showing it live as it was happening. If you don't believe me, go back and watch those videos. I was still okay from a drawdown perspective. I've obviously added more capital to this account, almost at $80,000. That's real money. And basically have upped my ES usage because if you recall, I'm kind of splitting it across multiple different asset classes. But in terms of the S&P, like I said, when it broke to a new high, that usually means resistance is below us, and path of least resistance is up. That doesn't mean we're going to go straight up, right? We might come back down and test this, or maybe even come down and test this. I don't know. These lines get messed up on Tasty sometimes. So that's my thesis. I think it's digesting a lot of the tariff news. A lot of these new headlines don't seem to move the market that much, or impacting negatively. So we might actually be able to get back to focusing on fundamentals and earnings, and we'll see what happens. The debt bill passing, I don't know if that's really great for the U.S. long term, but Maybe again a good thing to make things more certain for the market. The market doesn't like uncertainty, so it gives them at least an idea of what to expect from the market moving forward. If we can get rates to decline a little bit, that would be helpful for real estate and many other things. I guess it's helpful for risk assets, we'll say that. And I would say I kind of want to go through and see if I can see, what is Donald Trump related to in terms of what he owns. It's been clear that he's definitely now owning a lot of things related to crypto, so that probably gives a bid there. He's always been big on real estate, so he's doing a lot of stuff, the bonus depreciation, that's type of stuff that will help commercial real estate and just real estate in general. So I think that if you're in not necessarily just the stock market but those types of things, see how you can get exposure to those things if you don't have exposure, because I think that those are going to be the things that they try and kind of push up with their legislation. But let's look at crude oil. I have been doing the 111 on crude oil still, and it's been mostly working out. I would say I didn't have them. I had up my allocation, so I didn't go off the past couple weeks, but just went on today. Did another one. I mean, it was pure luck, but I basically had one of my automations close pretty much right here. So I had done the 111 down here, it rallied up, and I mean, we're expecting it to correct, right? It was a kind of short-term pop and all related to a lot of geopolitical stuff. So you don't know when and how fast it's going to correct, but kind of luckily, I think it opened, gapped up. That was enough to hit my profit target, and it closed automatically. And then I think it was set to then run the next day, maybe. I can't remember. I'll have to go look at the history there. But it basically closed it, and then the market kind of dropped. And I think it opened up another one here. I'll go look at my trades when we kind of go through that. But that was lucky. So sometimes it's good to be lucky rather than good. But same thing with bonds. Long term, I think rates are probably in a range here. Doesn't seem like there's crazy inflation going on anymore, right? That's kind of been digested. Maybe it's going to be easier to do TLT. So ultimately, looks kind of like, and these always can move. It kind of looks like this, downtrend is still intact in general. So we'll see. That could mean that rates are still going to go higher, but maybe we're putting in a bottom here and rates will drop lower. Again, that will give a boost to real estate, in my opinion. If you're thinking about real estate now, I would suggest thinking about it in this way. You never want to bet on a rate drop. So always make sure if you're doing investment, rental, real estate, or whatever, the numbers work at current rates or maybe even slightly higher, or there's a value add there. But I would say if you can get if you can get in now and the numbers work, and then you get a little bit of rate relief, that's usually what pushes values up, and then obviously your cash flow increases. Just a little side tidbit of information there on the real estate market and bonds in general. Gold, I didn't disable my automation, but I think I reduced my allocation. It hasn't been going off, so I want to re-engage that. I'm stupidly, I've been a little bit cautious. I do think it's still in this uptrend, but I partially feel like it's doing this wedge pattern, and I feel like it's going to break to the downside because I don't know what the catalyst would be to keep it going upward. But you never know. That's why you just let the automation go. When I turn this back on, I am going to be using more of a butterfly instead of the put spread, because the short put spread is so directional, and I'm kind of thinking there might be a downdraft. I would rather do the butterfly position or the kind of the broken wing butterfly. It's a little bit more resistant to a directional move, and I just think it's probably better. It gives me a little bit more cushion, and if it does fall into the range of the peak and the tent of the butterfly, I could potentially make more money. So that's kind of my approach on gold there. Collapse these down. My computer's struggling at the moment. So let's go over some of the long positions here. Intel actually finally got a bid today. I'm cautiously optimistic that I think this is going to be the start of a move up. I'm hoping, and this has been my assumption all along, that it would maybe play catch up. I think if you recall, I traded it from here, I think, into here, and then I was hoping it was going to continue to break out, and all it's done this entire time is move sideways to down. So my thought is this is kind of a line in the sand right here at the $22 level. It doesn't have to be exact, but you can see high volume and it breaking up, finished towards the high of the day. So my hope is with NVIDIA hitting new highs and they're coming out with some statements about, redoing their manufacturing plan and all that type of stuff. I'm thinking the news cycle is hopefully positive and the new CEO is going to be steering the ship in the right direction. So my hope is, better development, better news comes out and kind of pushes this higher. I have somewhat added to it. I think I added 2 contracts. I was both short puts while being long calls. So it was like a risk reversal position. And I originally, closed down the short puts, and then I did add to calls. So I didn't have much premium left in the puts, and I wanted more upside exposure. So this is, up $1,500 on the day to day. You can see P&L year to date though is only 542. So I held off to adding, even though I kind of wanted to add today. I think it has some momentum behind it. But this is just what I'm doing. I kind of want to get up a little bit more. If you recall, my lesson over time has always been don't add until you're profitable. I think I broke that a little bit on SOFI, but not too much. I'm trying to hold that discipline to basically add once I get up a little bit more, because in my opinion, this is all well and good for it to go back to, this level over here, the $26, $27 level. But my hope is like this is the start of this like resumption of a uptrend. So I'm thinking this is the smaller move, and then hopefully the longer term move is back higher. So I'm just kind of waiting for this. As it starts to move towards this, I will add, and then once it confirms a break and close above this level, as you know, and as they say, gaps are made to be filled, it could move back up to here. That's from a technical perspective. I think technicals and fundamentals could line up, and they often do that. So that's how I'm going to play it. Basically add a little bit more here. If we get a resumption of this trend, it will probably pause into this level unless there's some huge catalyst news to push it higher. If it closes above this level, I'll probably add more. And right now, again, this is what I'm doing. Don't follow what I'm doing. Do whatever makes sense for you. Right now, I have longer dated calls, obviously. They're not necessarily leaps. They're less than a year, but I might switch these out for a little bit longer dated depending on how I want to play it in general. So you can see SGov, I have about $65,000 approximately in there. So we're earning a good yield while we're using the leverage on our positions. And that's one of the benefits, obviously, of futures options and just options in general. Get to earn that still. SOFI has been the biggest winner, but it also was the biggest frustration for a while. So, excuse me, I am now up. You can see year to date about $6,500. Got 25 contracts on. Again, less than a year, but when I had it on, you can see I've been in this position for almost 4 months at this point with just this position. I've traded in and out of it over the time, and it's been super annoying. Had I been able to just hold on to both my stock and calls for a long time, I would be up way more, because I think I had like 6,000 shares at one point down at the $8 level. So it just goes to show you, maybe just hold. But I mean, this is kind of crazy. And again, all these lines moved around, but this was just like a big base that built out, in my opinion. And finally it kind of broke up, came back down, broke back down. So kind of a fake out for people getting long. But you can kind of see, again, I had these drawn differently, but this is kind of an inverse head and shoulders pattern if you subscribe to technical analysis. Again, I just am trying to think of what's going to have positive news flow, and it has, and it's finally started to kind of get some relief rate wise, get some relief from the student loan, all that deal, and now they came back out and they're going to talk about they're trading crypto again. I think there's a lot of other stuff that they could pivot and do. Oh yeah, and they came out saying they're doing more private market stuff. All positive. Usually gets faded, kind of like this. This concerns me a little bit because I was really hoping it would kind of gap up and then stay, almost like when Intel was finishing towards the high, but instead it actually gapped up in the morning, got sold off. So clearly the market wasn't super positive, and this was on higher volume, so I'm a little bit cautious there. Otherwise, I might have added to this position. I think that if it pulls back from this level, I'm probably going to sell puts. So I'm probably going to sell 75-day puts, maybe 90 to 120-day puts. Again, I'm kind of expressing a long position synthetically and kind of doing it tactically. Obviously, I'll get the decay on the put side, helps finance the calls, and then I'll probably add more position and probably roll out. The issue with SOFI, if you're trying to go long term, they only go 556 days. That's still a lot of time for things to play out, but some of them have, I think my RIVN is 892 days till expiration. So that's really long dated. That's been a bit frustrating. Just to cover that quickly, that was actually one of my better winners. That was moving fairly uncorrelated from the market, but you can kind of see how it's been. Literally, this was when it was going great. I'm feeling great. I think I might have, I think I added here a little bit because it did confirm breaking above here, and then it's just sold all the way back off. I don't know what the catalyst is going to be there. It's kind of broken in my opinion at this point. I'm not going to add until I see a little bit maybe more resumption of the trend or better news coming out, or ideally it breaks back above here. I do have time to let it play out. I do think they have a lot of good cars coming out. They're like smaller R2 SUV, I think, is going to be very popular, especially given all the stuff that's happening with Musk. There's more and more reason for people to kind of move away from Tesla. I mean, if you have that opinion, I don't really think it matters in general, but if you want to do that, I think that more people are maybe looking at other vehicles, and those are just good in general. I think they would have taken market share regardless of what would have happened with Musk or whatever he's doing. And so basically, I think it is well positioned. It's just a matter of they don't have the sexiness of Tesla or even Musk making headlines, which is both good and bad, right? So they don't have the technology either from like an AI standpoint or whatever it is, but they have really good cars that seem to be really well liked, which is usually very good. But we'll see what happens there. I'm just kind of in a wait and see mode, and I'm going to wait to add any kind of position there until it breaks back higher at this point. So Bitcoin ETF still have the short put spreads going on automatically. So right now I think it's just at my limit of open positions. So it's stuck there until one hits profit target or a loss. I do think that there's a tailwind on Bitcoin in general. It seems to be hovering here. My girlfriend's asking me, what should she do? She has a little bit of Bitcoin. I was like, just hold it. I think that the path of least resistance again is higher, and if it can break up convincingly above this level, I think it'll go to 120 quickly, and then probably 150. Pure speculation there, and I just think there's a lot more mass adoption happening, more news that comes out all the time about it. So that's pretty much the quick update, or hopefully kind of quick. Trying to get back into doing these more consistently and updating. But let me know if you have any questions in the comments below. Appreciate you watching and checking back in, and gonna keep this going and keep just showing what happens, whether it's success or failure. So hopefully you like that and subscribe, and I will see you on the next one. Take care.